Hi, welcome to Volatility 411 for Cinco de Mayo. I'm Russell Rhoads, Head of Research and Consulting at EQ Derivatives. As I stand here, the S&P 500 is up a little bit. VIX is down a little bit to 34. Haven't broken that 30 level on an intraday or a closing basis in some time. In fact, the last time we closed below 30 for VIX, it was February 26 when there was still snow on the ground here in Chicago. 2020 is different, but do note that May, June, and July are typically the three lowest months for VIX closing prices on average. Taking a look at the VIX term structure, mentioned that spots at 34, May's at 33.85, June's at 33.65. We're calling that flat. Flat often indicates an awful lot of uncertainty in the marketplace. We're going to give a little love to the farther end of the curve. September on the closing prices yesterday was at 32.70, October 33.35, November 31.075, December 29.90, and then we pop up to 30.05 for January, which has been on the board for a couple of days, for about a week or so. Do note, October's elevated. We're attributing that to the election because October settles into November SPX option pricing, and December, it's always at a little bit of a discount due to the holidays around after the December expiration. Just taking a look at a couple of trades on the June options. Somebody did a bearish trade selling the 20 call at 13.95 and buying the 25 call for 9.82. They took in a 413 credit. June settlement under 20. They get to keep that whole 413 credit. The biggest risk is 87 cents. And then there was a 1x2 using the May options. And this was kind of interesting. They bought the 37.5 call for 261. They sold two of the 45 calls at $1.25 each. The net of all of that comes to a cost of 11 cents and a break even at 37.61. However, I do think if we get close to expiration and we're in the mid-30s with VIX, that they may trade out of this thing for a little bit of a profit. So we'll see how that one works out. So for Cinco de Mayo, I'm Russell Rhoads, and that was your Volatility 411.